If you've been trading markets for the last few years and decades, then you would know that watching bonds is one of the most important things to do. And Bill Ackman has a massive call. He's betting that the Fed will cut interest rates sooner than the first quarter of 2024. What could this mean for our investment and trading portfolios? Well, of course, Ackman just recently closed a massive short that he's had on US Treasuries, disclosing them right near the end. And it could have dramatic implications on what is actually going to happen with the hard landing versus soft landing narrative. Today, we discuss the melt-up that continues, much in part thanks to a potential Fed pivot moving forward and why that could still be a sickness in the markets, and what's going on with some of the hottest stocks as they continue to coil into what's going to be an explosive move. But really, the last 24 hours were more about two things. Number one, the US dollar fell absolutely through every single one of the supports. And meanwhile, one of our favorites of the last few months has been going incredibly well. Gold absolutely bazookaing through to $2,050 an ounce. Will we see an epic run on this metal? Let's talk about it right now. Well, welcome back, everyone, to the Daily Show where we talk about markets around the world. And I've got to say, it was a pretty sad morning here in Australia when I woke up to find out that Charlie Munger had passed away at the age of 99. Over on our X account, I posted a couple of my favorite quotes from Munger over the years. And I've got to say that he had a massive impact on my trading and investing journey, as I'm sure he did for many of you out there. Some of my favorite quotes and my understandings of them have changed over the years, but I just want to read a couple here and see if they can help you in your trading and investing journey. This one is one of my favorites. The best businesses have enduring moats. Now, if you've watched the channel for a while now, you would know that I'm a huge moat investor. Basically, I like businesses that is super hard to go and compete with them. An example of a high moat would be something like Microsoft. And of course, it's one of my favorite businesses and arguably pretty much my favorite stock in the market. There's some other great ones though as well. A great business at a fair price is superior to a fair business at a great price. Think about all of those quality stocks that have come back. You might be chasing a big discount on something like an IBM when you could have been buying AAPL or Nvidia or another stock that's quality for your investing portfolio. A great quote to live by when it comes to investing. And of course, there are so many other ones, even things such as simple rules like this. The first rule is not to lose. The second rule is not to forget the first rule. Now, for many, that may seem quite simple, but as I said, my understanding of these quotes over time has changed. When you think about it, what he's telling you in some ways is to also think about your risk management, to really double check everything you're doing, and to also think about the power of compounding. When you lose, it's hard to get back. When you gain, it's a beautiful thing because, of course, you can compound your profits and that can make a massive difference. Anyway, let's get on to today and talk about everything to do with the markets over the last 24 hours and what we think is going to happen moving forward, especially about bonds, because there's some super stuff here. And I think you might be surprised how powerful we are going to see big moves going on in maybe even the shiny metal gold. It's looking pretty good and it's been doing well for some time. Tesla was the standout of the last 24 hours with a 4.51% move. And of course, we go over to see the fear and greed index still in that greedy side, pushing into, hopefully soon, the extreme greed if you're a bear so that you can actually see some type of pullback. Speaking of pullbacks, do we have the stats moving forward for that? Well, first up, let's talk yields because they continue to drop off in the market, and that's pushing this narrative of a huge rally into a soft landing scenario. And I put soft landing in inverted commas because we don't know that yet. We're just speculating. And of course, the market does that. It tends to be a buy the rumor. And then if we actually see the Fed start to do rate cuts, that's when you should be terrified. Here in the yellow line, you can see the massive changes over the last couple of months of where the yield curves are going. And if we have a look at what our expectation is moving forward for bonds, there's some pretty good stuff here if bonds actually do get the big falls that people are expecting. A 50 basis point fall is expected to add this to treasuries. Look at the 30-year, up 13.19% in that scenario. Some people are now starting to call for a 150 basis point fall, up 33% in Treasury scenarios. Now, of course, they're coming off an incredibly low base, but this is what Ackman's getting at. He's thinking that people are going to go for the old faithful when you tend to have a non-inflationary bust and a proper crash. When you do have a hard landing, generally people will go to Treasuries, and it could be an interesting time. We'll talk more about that in upcoming videos as well as you get a better understanding. So make sure to subscribe if you're interested in those types of comments. Consumer confidence and the stock market. I just thought I'd show this chart just to show you that if you accidentally buy confidence peaks, the returns are not so good. Now, if you buy, of course, pessimism in the markets and fear, then of course it does a lot better. This is a famous one from both Munger and of course Buffett about buying the fear. Let's talk about what the markets are doing right now, though, because a lot of it comes down to what we call CTA positioning. So CTA positioning is increasing, and we can see on all of these charts, it's off the scale with huge amounts of short positioning being reversed back into the positive side. I think there's like a plus 94 billion tape, and it's pretty strong. So for now, this is a huge reason why the markets are still pushing up. And until we see CTA positioning really kind of moving back around to the negative side, it's going to be hard to see markets melt down. Let's talk about oil as well. This is starting to get really oversold. We'll look at spot later on. I just thought it was an interesting chart because Goldman Sachs have this in the latest percentile of number 8. And you can see there are previous periods where we've seen this thing flatline into the lows, and that's been an opportunity in oil. Recently, we've had some big dark pool transactions going through in oil, and it's led into a bit of a basing structure in the stock. Some other things that I think are really, really interesting in the markets right now is, of course, nobody's really pricing in anything to do with bankruptcy filings and the credit swaps. So basically, we're seeing credit spreads just saying, you know what, it's okay, it's all good, while we have seen a whole bunch of bankruptcies. I would say, though, that this chart, if you notice, bankruptcies are actually coming down and not going up in recent months. And I think that's something that's important to factor in here. It does look like some things are actually improving when it comes to that maybe the zombies have been dying across the board and we're getting maybe less zombies dying, but we'll find some stats for that soon. Gold seeing some of the biggest inflows for quite some time after having a huge outflow for a huge period. This is really late to the party. Obviously, we've been talking about this now for 2 months, but it's just interesting to see the flows coming in. It still means the party could be just getting started. But let's talk first trading day of December. And this is a huge deal. And I think it's a big, big point of what is going on in the markets and, of course, what we could be looking for moving forward. I posted this in our newsletter, links in the description down below. There are 2 charts in that newsletter that I will share here a little bit later on, but just go and sign up because it's pretty damn good. One of them is for gold and what we expect in a rate cutting environment. It is phenomenal how insane gold could go. But at the same time, if we talk about first trading days of December and December in the year moving forward, I posted some charts there. But have a look at this. The first trading day of December, what tends to happen? We actually get negative correlations with the S&P. Up 8, down 14, only up 36.4% of the time. So that's for the 1st of December. So could the bears be just around the corner? Well, stats would dictate that it is very possible and that there could be some further weakness through December. We've already talked about the idea that usually with December, especially in pre-election years, we get that little bit of a sell-off dip that tends to happen for around 5 days, which can start somewhere around the 4th to the 6th of December. Again, more of that in the newsletter, and I'll post it here in another video. But basically what we're seeing is a huge shift in narrative from everybody seeing something to be bullish to maybe a bit of a sell to a rally. Now, that's what usually happens. So just remember that if we get a sell at this point because of the strength, you have to expect it to be relatively shallow and to be more normalized. And we'll look at that on a chart later on so you can kind of see what our expectations are in terms of price action and whether that will occur. We know the VIX is getting crushed recently, and this is a big deal because, of course, it means that options are suddenly getting a bit cheaper in the markets. And it does also mean that we need to be on the lookout for position-based options trades because really what that's doing is it means we have coiling markets through so many points. The longer they coil, when they break out, it tends to be super aggressive. Here's a big reason why we cannot fall at this point. I posted that 24 hours ago. I'll post another one over on our X account in 24 hours. Take a look at this. The DAX, 81% bearish positions. The Dow, 81% bearish positions. Just everybody's trying to hammer that bear position regardless of the sentiment that's been coming out recently. And that's been leading into, of course, some falls across the board. What about equal weighted market versus credit default swaps? We spoke about this in the previous video. If this continues on the way down, then of course markets should drive higher, and it is something that we'll be looking at and following up on later on with the charts. So we continue to get this question. I guess I'll just understand it from this particular basic standpoint. Why can we melt up further, and how is this even possible? Well, when we see 7 and 8 day runs, just remember the stats are that we tend to do these melt ups and they actually last for around 60 days. So far, it has been working exactly as this. And that's why, in most part, you have to expect a potential sell-off in December to be relatively shallow. But 2024 is totally different. That's when the facts will start to come in. And if the Federal Reserve is forced to rate cut faster, such as Ackman has said, what do we all think that means for the economy and what's going on under the hood? Now, we've already seen the federal liquidity start to spike up massively, and we've been reporting on that. Another reason why I think markets are rallying at this stage. We'll look at that chart later on in today's video. But really, whether it's a soft landing or a hard landing, the facts are that we tend to see a market that drops pretty significantly, usually around 10% plus in terms of the drop off, and it can be very brutal. I think on average it's around negative 22+%, which we've shared again a couple of weeks ago on the channel. So what happens? Well, we tend to see some pretty mighty sell-offs. Those sell-offs can last upwards of 180 days. Some are bigger, and it gets a little bit nasty. Now, what that is important to note for us is that if we look at the last 14 times this has happened, only 3 of the 14 were actually soft landings. So the stats are not in the favor that the Federal Reserve has done the right thing and then it's working off. We can already see around the world credit loosening across everything. We've got rate cuts coming in from pretty much all of the minor central banks around the world. And we know that that's probably going to increase as people start to struggle and they've probably overpushed the economies. Let's talk now about coiling and dark pool transactions before we get into the options, the rotation, and the charts. Well, straight away, we can see here that we have some dark pool transactions going on semiconductors right at these peaks. Now, this could still be buyers because we are coiling on semiconductors and coiling on the Magnificent Seven. What is more likely, though, when we talk about VIX and something like oil, is that we're seeing some interesting positionals. Basically, the VIX has gone down to, this is the short VIX futures, so the VIX has gone down into the 12s, and that's kind of like a low historical reading. And it means that people are starting to bet on some volatility coming up. And rightfully so. I mean, there's an expectation that we might have some weakness in December into some strength, but maybe it's not going to be as big as possible. Number one trade here on short VIX futures coming through over the last couple of sessions. Let's now move over to unusual options activity. First up, it was still a small day, 33.6 versus the 39.2 million in terms of options activity. And we saw 57% calls coming through the markets. Retail accounted for 28% of the single leg trader volume. And when we have a look at some of the unusual activity, a lot of it was happening in different stocks. One of my favorites, of course, Microsoft, 1.14%. Tesla getting through a little bit of extra volume as it went up 4.5% in anticipation, I guess, of the Tesla truck. And then we had a couple of earnings results. There were some nice moves here. Specifically, we started to see a little bit of a pickup in some of the energy stocks. But I've got to say still, it was just so impressive what stocks such as GDX did. And that doesn't show here, but it was serious. And we'll look at that very, very soon. Let's talk about rotation. Gold, 5 days, plus 9.51. Metals, plus 2.22. Now, here's where things get weird and probably a little scary. Staples, utilities, and healthcare over the last 5 days have now become some of the best performers. And arguably, gold is also a defensive. So the thing is, we are now in a defensive rotation as we melt up. Does that sound fishy? I think it kind of does. It sounds pretty bad to me. And it's something that makes us ultra cautious as we melt up into this next little period. GDX up 4.8 on the day. Of course, it was a monstrous move and it was easily the standout of the session. Let's go through some of our leads right now. This is, of course, effective yield rate. We're still seeing it drop off, allowing the markets to potentially drive higher. So that's not really a worry at this point on the charts. We've got the equal weighted market kind of sitting around, slowly grinding higher. However, it did get a rejection over the last 24 hours. And we've got one of my favorite reads on the market here, my favorite bond indicator, continuing to drive higher. So again, no warning signs from that. Treasuries were absolutely smashing it up as yields dropped off, forcing the dollar back down. So we saw US 10, US 20, US 30 year all making new lows, hitting all of our major alerts for the week. And of course, we saw markets rallying off those points in particular, with some good, nice moves coming into things like copper again. And of course, one that we didn't see come through was biotech, which I was a bit surprised at. I thought biotech might have a nice little run in it over the last 24 hours. Put call ratio is still in the middle, so not much lead from that particular indicator. But we did see Dow Jones Transportation Average start to weaken off. If this continues to weaken, remember, caution, alert. We've got rotation into defensives potentially going on, and we have maybe some weakness in the transportation average. That's not good. We'll also be watching home builders incredibly closely because guess what that is? It's a coil. And when coils break out, we need to be paying attention. This market needs to be watched and paid attention to. What about the central bankers? Well, they just think it's all good to inject. We've got the purple line up, we've got the green line up, and of course the markets are hovering up. So this really points towards, still there's some support in the back end going through. Copper also improving, often showing signs that the economy underneath is doing okay. We'll see about that. But anyway, at this point, copper's moving up, and that's the trend. And this is much in line with what we spoke about a few weeks ago when we kind of said, copper is most likely moving to the bull side. A great 24 hours for this particular metal. What about the US dollar? Well, it fell through that support and there was no bringing it back. Basically, it just got dumped through the zone. And as we said, the trend was still down to neutral. And at this stage, it's still down. Look, it is in the next little area over here. That's certainly an important point to watch, but very little structure. Buying the dollar right now would be very, very scary. There are no reasons to do so on the charts. We'll update if that does change. Let's move over to the success of the last couple of months, in my opinion, which has been the shiny metal. And it's been pretty nice. I got to say, this is a good run on it. 2050. This is really my best expectation this week. So it's done it in 2 days, 3 days, nothing, 2 days literally. So we have seen a very large move in gold and it looks like it's trying to press for a new all-time high. I wouldn't be surprised at all for the gold to really move in. I've said on the channel that I thought over the next couple of years, and I said this back down in this level down here really, that gold could be pressing 3,000 over the next couple of years. Of course, there's no guarantees. It's a prediction. It's, get out the crystal ball and start talking about that. And I'm not all about the prediction, don't get me wrong, but it is looking much better on the charts. And of course, for cup and handle players out there, you're going to love your cup and handle here, aren't you? Because it's a pretty nice handle. I'd almost drink out of this cup. It looks pretty good. So, of course, breakouts happening. Weekly close will be important to gold. We don't have to go crazy yet about it or anything like that, but it's certainly an exciting one and nice to see it playing out. GDX, also an incredible session for it, 4.8%, beautiful inverse head and shoulders. Obviously, we've spoken about that on the channel quite a few times. Let's move over now to oil. Oil is still trapped within a range. Now, USO, which is where we're getting those unusual dark pool activities, we're seeing that also consolidate through the range here. Look, it could be buyers accumulating a position, but we just don't know it yet. And I think that there's a lot of trend lines and a lot of things that we could do work on. So oil, I would say it's neutral bearish at this stage until proven otherwise. Tesla, with the potential breakout here, looks like it's going to try to push into the next session. We're right at those highs, 246, but it did close at a new high than the previous one. So I think it could be looking at a bit of a slingshot trade here. And a lot of this is to do with, people feeling a bit more confident and stuff. I think there's something to do with Cybertruck and everything else that's going on. So this is, more of the hype train at the moment. The price action is looking bullish. Next stop for something like a Tesla could be in the 255s or even 270s is a expectation for the move. Let's talk about the Mag 7 now. Now, this is where I think the market is also playing a little bit catch up. Now, we've got here an accumulation, a coiling market. Well, we're guessing it's accumulation because the trend's up. Now, if this goes to the negative side, that's going to be a pretty bad catalyst. And it's the same with semiconductors. So take a little bit of a look at the Mag 7. We'll keep updating here. Of course, for now, it looks okay on the charts, but we'll break this one down into some Wyckoff potential, some accumulation potential moving forward, because at this stage, it could be setting up, and we'll continue to wait for the real triggers either way. CQQQ still basing. That's the Chinese market. It looks like it's basing off. And the German market rallying back up to where if shorters are going to have a go at it, they may try. I don't know if it's a really good idea to go against this market right now. It's not really the best move generally, and we didn't exactly close underneath 15,900 on the DAX. Everybody can see this level, and I'm not sure if it's done enough trapping and everything like that. Remember, this is an 81 or 82% short position, but it has come back to that level where you would generally expect some weakness. This is an area that day traders might want to get involved in. I'd call it like a 6 out of 10 trade. If that, just because you're going against trends. So maybe it's even a coin flip and you've got to get your ratio out better. US 2000 continues to hover around that boring zone of 1800, and it remains trapped within two areas. Of course, we did think 1800 may have bought shorters a few sessions ago. Nothing happened. It just kind of went up, down, and all around, and it's still sitting at up, down, and all around. A breakout, though, could get aggressive. So we'll be watching US 2000 with a lot of interest. Of course, 1878 on the top, and back down to 1700 on the low is possible. The Qs, let's move over to the NASDAQ, still coiling, making a series of higher highs, higher lows. We'll use the futures to show what's going on here. Two rejections through the low and trying to get above that long leg doji here on the futures. So the markets are still grinding higher. There's no doubt that at this stage, it's still melt up territory. It's still within those stats that we've talked about. And that is still the levels we're looking at. 15,850 for day traders, 15,730. So we've really stayed out of a lot of trouble, I would say, by constantly, making sure that we're looking for some kind of reaction. And there's just nothing at this stage to show superior weakness in the markets. Same thing on the US 500, tons of gaps left behind, lots of squiggly lines following along. And at this stage, it looks like it might even want a 45.86 in terms of filling to that zone. Then maybe we start to see weakness as we enter into December. Remember, December does bring with it technically some negativity, and we just saw the December 1st stat in today's video, let alone some stuff that we'll bring into tomorrow's video when we talk about the mid kind of month or early to mid-month sell-off that can occur in other years. Will it occur? Of course, we'll be looking for the triggers like anything else. Bitcoin continues to melt up, 38,000 being reached. We've got some good stats coming up on this one as well. So if you're a crypto fan, definitely sub. We've got some big things. I might even leave it for the newsletter next week. Maybe I will. It's pretty damn good. And we'll talk about that one. So, of course, that will be something we bring in. And for the news for the rest of the week, of course, we have just the general stuff that we've been expecting. So it's all this red news. We've got here prelim GDP coming out. We also know that we have the big one from OPEC, which is going to be annoying, which is, of course, on Thursday. That's going to push around oil a little bit. Core PCE price index, one to watch this week as well, 8:30 a.m. Thursday. And then if we scroll down onto Friday, you can see we have ISM Services PMI and Fed Chair Powell speaking. So there's some red news coming out, certainly some things to be watching and paying attention to. As always, guys, if you enjoyed today's video and you want to see some more, subscribe and smash that alert button. Still join up for the VIP free weekly newsletter. Hope you enjoyed the first session of it, and we've got a lot more to come. So yeah, check it out, and thanks so much. We'll see you in the next one. Bye for now.